Hey there, everyone. Welcome to this special edition of the Final Bar. These are your top 10 charts to watch for May 2024. Joining me in what has become a monthly exercise of market discussion, Grayson Roze from here at Stockcharts.
Good to be here.
Welcome back. Good to have
Thank
you here in the studio. I'm sort of getting comfortable with this area of the studio. It's good to sort of look at charts together.
Good to have you back in the studio, because the last time we did this, I was sitting there and you were at home, and that was a fun little reversal. Remember that?
That's actually true.
Yeah.
None of us felt comfortable with that arrangement, I don't think so.
I had a good time. I don't know, I had the little thing in my ear for the first time.
I didn't feel comfortable with you at the anchor desk. Let's just say that.
You know.
But getting to the markets here, obviously the S&P, the NASDAQ making new all-time highs yet again here in May. Last month, as we're doing this, we're in full pullback correction mode. It was a little tougher, I feel like, to pick things because it was everything had sort of been drawing down.
Yeah.
Now we're kind of back to new all-time highs. Where's your head at given the strength that we've seen recently?
Yeah, it's definitely easier doing this now that we've kind of hit the reset button on the markets and we're finding new strength again.
Yep.
I got to say, though, so there's a routine that I have every week. Okay. I have a chart list in my account, and it is one of my favorite lists that I look at. And it is also the simplest list that I look at. I look at a lot of charts, just like you do, right?
Yeah.
We look at breadth metrics, we look at number of stocks making new highs, we look at all of these crazy things about the market to dig into the internals. Yep. But there's a list that I have in my account that is a couple of indexes. It's the S&P 500, the S&P 400, the 600, it's the Russell 1000, the Russell 2000, and VTI, which I love, the total market. That's it, 6 charts.
Right.
Each one incredibly simple. It's just got a 50-day and a 200-day, and they're 9-month charts. And every weekend when I look at this list, I just ask myself, put all that other stuff aside. Don't think about anything else that's going on. Don't think about what you're reading on Twitter, what you're reading in the headlines, whatever. Yeah. What's happening with these 6 charts? Are they working? Are they struggling? Or are they failing? Are they going up? Are they going down? Or are they going sideways? When I look at those charts right now, those 6, it's working.
A lot to like.
Pretty much everything is working. When you just look at the price action, nothing else, try to simplify it as much as you can. I don't know. I like what I'm seeing right now. We've had a dip. We're now back at all-time highs.
Yeah.
I like to see that.
And it's funny, the dip that we had, the drawdown, which felt pretty scary, I feel like, third week in April. It was is this the beginning of something worse? But pullbacks like that are actually remarkably common, even in a very bullish year. It's arguably a much more healthy thing.
Yeah.
It's interesting. I did a webcast earlier this week looking at seasonality and the whole sell in May phenomenon.
Right.
The reality is sell in May, when you think about the 12-month period, sell in May has not been a particular great strategy. We've actually seen plenty of strength in May. We've usually seen strength into the summer. So if you look back at the last 5 years, there has been a major top 100% of the time, but it's been in the summer. It's been in June, July, August.
Yeah.
It's not been in May. So I feel like the strength that we're seeing now is actually mapping pretty well to what we've seen in previous years, especially given the drawdown in April.
Yeah.
But it does tell me there's probably maybe a top coming later in the summer. But between now and then, do you want to own things that are going up or not? And maybe some of these 10 charts would be things that would be the types of things you probably may want to be considering.
It feels pretty resilient right now. When you see the S&P 500 back at all-time highs after a bit of a pullback, considering all the other drama that we're seeing with the Fed and so many different narratives out there.
Yeah.
But to see the market back at all-time highs, pretty resilient.
It's a good reminder of the benefits of technical analysis. It's not about what could happen or should happen, what may happen based on all these drivers.
It's just what actually
is happening.
Yeah.
Let's get to some of the things that are happening. I'm going to kick it off with my first pick.
Let's do it.
We're going to the financial sector. I don't know if this is the sexiest place to start, but this is where we're going. Truist is a former merger of a couple regional banks. TFC is the ticker. Truist for me, I feel like represents, a lot of times when we pick these names, it's sort of representative of a theme or an idea. And for me, this is the play on regional banks. I had a really good conversation with Ms. Schneider of Market Gauge, who in the last week on my show, on the Final Bar. And we talked about the potential for regional banks given the reality of what the Fed is probably going to do. And if the Fed kind of keeps the short end of the curve where it is, if interest rates would push higher, which we've not seen recently, rates have actually come down a bit, and arguably that's what's helped a lot of stocks here in the last couple of weeks. But if rates would sort of remain elevated, sort of get a little higher, that actually could provide sort of a stealth rate cut or stealth rate hike, that is, right? So the Fed can keep the short end, the end where it is, the long end kind of comes up. Regional banks would very much benefit from that structure. So higher for longer probably does well for financials, in particular for regional banks. From a technical perspective, what I like about TFC is this is a stock that is what was in what I call an accumulation phase, which is a pattern of higher highs and higher lows. Bottomed in October, which was really a retest of the May 23 low. Back above the 200-day moving average, it really hasn't looked back, but we consolidated for quite some time. We were sort of rotating between 34, we'll call 37, 38. And then just in the last 6 weeks, I feel like we've had a bit of a change of character, right?
Yeah.
We have broken above that previous resistance. We've now made a higher low right at that pivot point, right around 37. So that was the resistance in January and February. Now that's started to become support a little bit, and bouncing off of that point, we're now making a new swing high. And if you look to the left on the chart, you'll see there's a lot of daylight between where we're at now and really retesting the early 23 high. So I like the potential upside given the macro environment, given what I think the Fed is most likely going to be doing now, given the fact, given what inflation data has been. And then I think there's sort of a clear path to sort of continue to the upside. And also, this is a name that actually has a really decent
Big
yield. So if we are heading to the point where we start to question the longevity of an uptrend for the broader markets, having an income component doesn't seem like a bad thing as well. So stronger price action, decent yield seems like a good combination right now.
Yeah. You know what's funny is what I don't like about this chart
Yeah.
is what I do like about this chart. I don't like overhead supply.
Yeah.
But the flip side of overhead supply is that when you see those price levels being taken out,
Yes.
it's a sign of incredible strength. You
Yeah.
see investors saying, nope, we're clearing those previous levels.
Yeah.
Sellers aren't coming in to dump the thing when it gets back up there.
Yep.
So you've got a little bit of overhead supply here, but if it can keep working up through those levels as it's doing,
Yeah.
it's actually a sign of strength for the stock and something that you can kind of hang your hat on. So I like that. That's a great
So I
pick.
think some of the regional banks could be interesting here
Lots to watch
for
in
sure.
there.
Your
Financials
first,
just a strong space.
fair enough.
Yeah.
Chart number one for you. Where are we going?
Chart number one for me, we are leaving the States. We're going to emerging markets. So my first pick is going to be EMQQ. Now, subset of emerging markets, it's internet and e-commerce. This is kind of going backwards in time a little bit to 2020, really. This was a fund that we saw get a huge run higher in the middle of the pandemic. This was just a big time winner.
Yep.
You got a lot of risk in this name. It is as growthy as you can possibly get. Not only do you have emerging markets, but you also have internet and e-commerce, which are probably two of kind of the growthiest spaces out there, right?
Yeah.
But this thing is finally starting to work. It has been absolutely slammed since that top in 2021. This thing just absolutely got slammed. But what I love to see is that it's been basing, it's been consolidating, moving sideways, and it is making its way up to new highs. Today, another huge day for this. We're up 1.63%, and we're clearing that big kind of island top, really, that island reversal from a while ago.
Yeah.
A lot of strength coming out of this space. It's also backed by strength in China. We've seen that for the last couple of weeks. A lot of strength coming out of China. This thing is dominated pretty heavily by China. I think it's about 45% of the fund is in China. Yep. So a lot of exposure there. But it's a space that's working. And if we do see investors kind of rotating back into China, this is one of those spaces that people might say, okay, I'm taking risk. I might as well just go for it. I'm going to keep rolling it into EMQQ and some of those growthy spaces over there.
Yeah.
So lots of love technically. I do think it is pretty extended. I will say that. We got great relative strength coming out of this thing. We've seen a huge move, but when I look at how far off its 200-day and how far off its 50-day, even how far off its 20-day it is, this thing is definitely extended. So I would be waiting for a bit of a cool down in this thing.
Yep.
But what you're kind of setting up for now is a bit of a breakout, retest, bounce kind of setup. So if we can come back down maybe to these levels in kind of the mid-30s, 33, 34, somewhere in there, and then bounce, that would be a sign of strength. And again, when you look at this thing on the weekly chart, I mean, this is where it really kind of changes for me. This is a huge sideways move with this giant spike in the middle, right? Imagine if we can make a breakout and do something similar to that. This thing has the potential to really start to run when it does start to work. So I like kind of the long-term setup on this in addition to the shorter term on the daily. So
I was going to ask about the weekly chart because that's what I was bringing up
Yeah.
as you were talking. I think the day, and this is one of those where the daily chart feels kind of overextended, but
It
the
does.
weekly chart shows you
Exactly.
the larger structure, right, and the
Yeah.
upside potential on something like that.
And that's the benefit to me of little features that we have, like these style buttons over here. So
Yeah.
I've got my daily chart assigned to this kind of top one.
Yep.
You can see this is a 1.5-year daily chart, and then I've got a 7.5-year weekly chart, and I can flip between those time frames incredibly easily, just using those little buttons. So yeah, I mean, here on the longer term weekly, you can see how long that base is, even with that giant run in the middle. So. Interesting chart, interesting space, interesting conversation now around China, which has been unloved for a while.
Seriously, is that the 156-week moving average
This
on your
is
chart?
the 156-week
Interesting
moving
choice.
average. If you do the math and you do 156 divided by 52, you kind of start to figure out
about a three-year
rolling
moving average.
Yeah,
Okay.
yeah.
There's a method there.
Yeah, and the orange line there actually is a 2-year moving average. So
Got it.
yeah,
Because the 150 week I've followed for years and years, and very similar. And you can see that breakout is what stands out to me. And I look at the weekly chart, tells you that it's been in a period of decline, a period of consolidation. Now maybe something.
Now we're
really
getting back above it.
change.
Yeah, look at that.
Good chart. An unpredictable start.
Yeah,
to
a little
the,
different.
here.
A little different.
All right, so we've got non-U.S. markets covered. You're gonna not be surprised then by my second pick, which is probably one of the components of that ETF.
There we go.
I would think. And to be clear, we really didn't compare notes on this before we started, so it's interesting we both kind of keyed in on that same thing. I'm looking at Bilibili, B-I-L-I, which is an internet name in China, and it's funny. For me, the macro commentary on China, I think there's a lot of people talking about, thinking about the tariffs, thinking about Russia and China and just competition and a new Cold War and what that might mean. For me, charts really have the ability to cut through all of that noise. At the end of the day, I'm less interested, to be honest, all of the implications of that. I feel like the charts will reflect how investors are expecting these stocks to grow or not grow based on those changing expectations. And the charts are telling you it's a pretty decent place to be.
Yeah.
What the chart of Bilibili tells me is that 2023 was not a time to own this chart. And think about why that is. Well, we're making lower lows and lower highs. We're below 2 downward sloping moving averages for most of that period. The RSI on this stock, I think, is what's most absolutely fascinating. From about January 2023, maybe February, all the way through March of this year, the RSI, the entire range sort of moved down. So we often became oversold on that big leg down. We never really got above 60 on those rallies, and that is just a classic sort of range rule, right? The RSI moves down, the momentum is overall more negative, and this is a stock in a protracted decline. Look at what happened in the first quarter, where we made a low around $9, which ended up being a retest of that October 22 low. So while the S&P and other averages well above their October 22 low, we were actually literally making a double bottom, and now we've rotated higher. And I think what's interesting about this stock from here is we've just really changed the configuration. Now we're making new swing highs, we're making higher lows, we're finding support at the 50-day moving average. We're back above the 200-day. Look how the RSI is now firmly in the bullish range.
Yeah.
And I would say the same qualifier on something like Bilibili that you saw with EMQQ, which is it is overextended right now, and a stock's overbought like this. My general approach is, number one, add it to a watch list. Number two, maybe set an alert. Think about where you might find an opportunity. If you're not ready to put in like a limit order or something, I like to put in an alert and just say, tell me when this thing breaks 15 or 14, whatever level that might be, and then use that as an opportunity to layer into a name like this.
Right.
But the longer term rotation is what's so compelling to me, and I think China has been an underweight for so many people, or it's just been off of their radar, and reasonably, given the technical deterioration, I think all of those themes have now started to change. And just a simple trend line, taking these major highs, it's all broken to the upside. So I think the daily, weekly charts really show rotation. I think it's a decent bet here.
This is the type of chart that makes its way into a textbook later on. I mean, look at that.
Yeah.
You've got, like you just said, the downtrend coming down.
Yeah.
Look at the change of character, too, the way that it's popped up against that 200-day moving average twice, and now just cruises through. That's a total change of character. And you've got those lows that, I mean, you can draw a straight line right across there just below $9.
Yeah.
That thing came right back down to test it, bounces off, starts to move higher, change of character. God, we're going to be studying that one.
I feel like it is. So if investors haven't paid attention to China yet, the charts certainly say it's it's a decent time to revisit that. So
Yeah,
we'll see.
absolutely. Good pick.
Your next pick.
My second one is going to be back in the States. Applied materials, so semiconductors.
Yep.
Obviously, a space that just continues to work and work and work.
Yeah.
We've heard a lot of talk. Semiconductors got hit when we did have that pullback in April. A lot of talk about, that's it. We're done with semis. They're going to cruise lower from here. And here we are back with a bunch of these names just widely distributed, all back up at new highs.
Yep.
What I love about this is that you kind of have two things. So for me, a lot of people probably know I like to buy breakouts, specifically over kind of more of a 1-year period. I like to have those a little bit bigger bases where you're coming out, you're making new highs.
Yep.
I also like trend though, and ideally I want something to break out and then start trending higher, and I'm going to add to it as it trends higher.
Yeah.
This is kind of a blend for me. On the shorter term basis, you do have a great breakout. I mean, look at that horizontal line that you can draw right there across kind of 215 around those levels. We've just made a breakout. We're kind of coming back down a little bit today, but yesterday's session, we made a beautiful breakout above those levels. This is a really nice little consolidation. I mean, you can draw a pretty clear rectangle around that, but it's breaking out within a broader uptrend. So again, you can draw those uptrend lines, right across those lows, really across the entire chart here. You can see the length of this uptrend. And Applied Materials has just been consistently outperforming the market, which is that line up at the top. It's been consistently outperforming the market for a long period of time. You've got a short-term breakout within a longer-term uptrend.
Yeah.
Just a lot to love. I also love seeing these moving average just steadily moving higher. Everything in the right order for me as well. You've got the 20 above the 50, above the 100, above the 200. Everything's just cooking on this chart. And so when you can take advantage of that kind of shorter-term breakout,
yep.
It's just a thing that I like to look for. So you can kind of see an earlier version of that on this chart too. Draw that line right across there using the inspect tool, and you can see we consolidated for a little while, and within that uptrend, we made a breakout, and it's continued to run. So if you kind of think about this thing as a stair-step pattern, Applied Materials could be setting up for another run higher here.
It's a really good chart, and it's fun. I mean, a number of names in this space, like NVIDIA and others, all sort of that similar product. Even like an AMD, which got dinged a a little more, kind of bouncing off the 200-day and rolling higher. So the space looked questionable not too long ago, but all of a sudden, I think it's a good reminder that the charts will tell you when things change, and I'm certainly getting that message from AMAT and
it's also a good reminder to dig deeper below kind of the index level or the sector, the industry group level.
Yeah.
Because when you actually dig through all of the semiconductor names out there, if you pull up a chart list full of semiconductors, for instance, God, that strength is distributed across that whole group. It's not just the Applied Materials and the NVIDIAs leading higher. It's from the $1 trillion market cap all the way down to the $5 billion market cap that are all moving higher. That whole group is just moving together, which is a sign of strength for the space. Gives me a lot of confidence in those individual names. So.
Yeah, and you're seeing some of that in like KLAC's another one making new highs along with Applied Materials.
Yeah.
Good pick. That's a strong pick. I intentionally avoided technology, hoping you would pick a semiconductor. So
I generally
mission accomplished.
Yeah.
All right. So my third pick, probably the complete opposite in some ways. We're going to look at a gold stock here. And it's funny. I would start off this discussion by reminding people that even with the rally we've seen lately from the S&P and the Nasdaq making new all-time highs, gold has still outperformed both of those year to date.
Yeah.
For now, we'll see what happens if we keep rallying.
Sure.
But first 4 months of the year, gold has actually been a better bet than either one of those. Gold stocks lag behind, because a lot of them sold off in sort of December, January, February. And you can see that on the chart of AGI, which is Alamos Gold, sort of a mid-cap gold stock. Came down. So as the markets were going higher in January, February, this space was actually going down. So what's interesting was gold really has led gold miners. And I think part of this is just a technical recognition that some of these stocks are making new breakouts. And I think that's what I like about AGI here. But it's also sort of a catch-up trade to the fact that spot gold or physical gold has done so well. If gold miners actually catch up to that, there's even more upside momentum, because this is obviously a play on the price of gold, and assuming that goes higher, this would be a good way to do it. What I like about this from a technical perspective, it's sort of that classic concept of what you call polarity, right? The resistance in November, we round-tripped back to that level we broke above, and then resistance becomes support. So again, using the inspect tool, you can kind of visually see how a formal level of resistance becomes support. And what I like about that, I always describe this as sort of a natural stop, which there's probably a better way to describe it, but it's when you look at the chart, you see a really clear level of support that, all right, if I buy it here, as long as we hold above this level for now, I'm pretty good, and I just lock in any gains above there, and I minimize losses below there.
Yeah.
It's pretty good. And that sort of natural stop right around 15, 1450, 15 is right around the 50-day moving average. So this is a stock that's just recently broken out. I like the break to new highs. I like that that's now become support. The 50-day is just below there. The momentum is strong but not excessive. The relative strength is improving. So when I think about how growth stocks are starting to do pretty well again, when I think about the number of names that are breaking out, there are quite a few. Gold tends to have a very differentiated return stream from other areas of the market. And so having that as a part of your general bet makes a lot of sense to me right here. And boy, the stocks are breaking out.
Yeah. God, that's a great description of it too, a natural stop. I mean, that's exactly why, like I was just saying, I love buying breakouts because it sets that line in the sand
there's your
for
level.
you.
Yep.
And you just you can manage risk around those levels really easily when it's a horizontal line. This is a great chart. I think on the show last time we talked about the strength in metals and mining, kind of a more broad group.
We do. We might add like an ETF or something like that.
I think XME was one of the picks. And I mean, there's been a lot of strength out of that group. Copper continues to just fly higher. A lot of those metals, a lot of those mining spaces and everything. Pretty strong.
And the commodity trade's been lagging behind a little bit recently. If that starts to improve a little bit, this could be an interesting area to be.
Nice uptrend.
Your third pick.
My third pick is going to be another A. This one, no MAT, just A. Agilent. This is going to be in the healthcare space, medical equipment. Again, kind of a multi-time frame thing here, and for me, a little bit of a change of character, kind of like we were talking with Billy. So you've seen this pretty ugly downtrend there in 2023. Agilent just continuing to move lower. Gapping down. We had some huge ugly gaps in this thing. Puts in that really, really interesting candle at the bottom. So the low on this thing, right? Look at what this does. It opens, it flies lower, and it actually manages to work its way back up. And what's interesting is that kind of becomes the change in character. And then look what it does. It starts putting in these gap ups, no longer gapping lower. Now it's suddenly gapping higher. They're all over this chart. So you've got that kind of clear change in character, makes its way above those key moving averages. They all get sort of back into the right order. Again, 20 above the 50, above the 100, above the 200. And now what you're seeing is that thing is starting to make a breakout. So still a little bit above it to go. Still, a little bit of room left to go here before this officially makes the breakout. But I'd say this is a really interesting one to watch. You've got, again, those clear lines in the sand kind of coming across here. We've got the relative strength line also making a change of character. We've seen that underperformance for a while. We consolidate sideways. We can do the same thing with the relative strength line that we do with the price bars. Now we're seeing that relative strength line start to make new highs, actually. If we use that, we can see that line is actually getting up to new highs. So you can see this thing making a change of character, starting to outperform the market instead of underperform. And again, when we zoom out to the longer term weekly, we can see how interesting this is. Agilent had a long history of running higher, a really, really beautiful uptrend a few years ago, and has been consolidating for the last couple of years. Since it made that high in 2021, has really been moving sideways overall. Now we're seeing that we're getting back to kind of multi-year highs. It's not just a sort of a one-year high. It's actually kind of a couple of years there, really starting to take out some of those levels from 2021. I also like a chart like this because if you draw that line in the sand, you take an initial position, around the breakout there, you've still got a couple of levels above you to sort of work through, but not a ton. So there's not a ton of overhead supply on this thing, but there is a little bit. The reason that I like that is if you take an initial position, it keeps working. You can actually set kind of another entry right up at those all-time highs, and if it takes those out, you know that this thing is just flying up. No more overhead supply, no more sellers sort of trapped above you. So I like that you can sort of structure a trade on something like this, especially when it's a longer term base there. So a lot of interesting things to me on the chart of Agilent across multiple time frames.
If you go back to the daily chart, that
let's
October 23 low, I haven't looked at this in a while, but this is like a little mini masterclass in candlestick analysis. Look at the
really
long
is.
lower shadows, a lot of hammer candles in there. So it's interesting. It's like as you're making a new low, I feel like
here.
your initial thought is probably this is bad. We're making a new low, which I totally agree with. But the character of the market as we make new lows, I think, matters. And here, those long lower shadows suggest that during the day you have people buying in on the weakness, and usually suggest so. After that gap higher, after that last one, I mean, what a great entry point. And then even after that, you have another sort of long lower shadow, and we've seen that again here more recently with the lows in February and in April. So really good illustration. And I'm thinking, why don't I use candlesticks more often on some of my charts? Because it's a great way of mapping sort of the short-term supply and demand with the long-term picture. I think that's really well done.
We touched on this a little bit, I think, on the last show that we did. And I said I love using candlesticks exactly for that. It lets you see supply and demand intraday, even on a daily or on a weekly chart. You're seeing that come in. You're able to actually say, well, okay, it gapped lower, but what happened during the session? And if you see buyers start to step in, you're seeing a lot of demand for that thing, and it actually gets sent back up during the session.
Tells you something.
Tells you a lot about those classic supply and demand dynamics. So
that's a great example.
Yeah,
thanks for bringing that one on. All right.
What's your next?
My fourth pick. So my last two are both consumer names.
Okay.
Crocs is where I'm going to. Crocs is an interesting one because back in the day, in my Fidelity days, I remember seeing Crocs just be this ridiculously impressive growth. This is like the golden age of Crocs, I feel like, before people knew about them and all of a sudden everyone did. And so every time I bring up this ticker, I sort of flash back to that point. And I don't know if we're ready for another like 10 bag or another incredible growth phase, but this is setting up with a classic cup and handle pattern, which is why I wanted to highlight it here. Cup and handle pattern, which we're showing here over the last 2 years, is when you have a big run higher. Then you have this big rounded bottoming pattern. You have a gap at the left edge, which is actually comes up pretty regularly. And then you have a retest of what you'd probably think of as the rim of the cup. So you have this big rounded bottoming pattern, which means you have distribution. Then you have accumulation. You're back to that same point. Then you have this little secondary pullback, which is the handle of the cup. So you have the cup with handle. The trigger, right, which is sort of the way that you confirm, all right, this is a cup and handle, I need to be considering this, is you break above that rim. So I think above 150, which is where I have an alert set, and I would encourage everyone watching to do the same, that would complete that cup and handle. So literally what I do on a chart like this, I draw the line, I save it to a watch list, I set an alert saying, tell me when Crocs is above 150. Now that we have the little text on there, I say, cup and handle broken, my phone dings when it happens, and I know I want to maybe take action on it. But charts like this, it reminds me of like a Murphy USA, which is a name we've talked about in one of these months and months ago. Some of these stocks that have a big run and then this big sort of basing pattern, but the shape of this pattern is what's so important. And William O'Neill, who founded Investor Business Daily, really popularized this particular pattern, found it as a key way of identifying continuation and finally breaking above that resistance after over a year of having that as a ceiling means something unique. And that means everyone that bought during this period is now sitting on at least some sort of meaningful gain. And some of the ones that bought at the lows are obviously sitting on a pretty healthy level. The only thing that concerns me about this is the bearish divergence. And you're seeing this right now on some charts like in Amazon and others that are making potential new highs on weaker momentum. So that's like the one thing that stands out to me other than overall this is setting up pretty well. And again, be patient, right? So I mean, a lot of people see this and immediately think, okay, that's the trigger. I always think of patterns as having three parts. There's the setup, which I think we've done. There's the trigger, which means we break above 150, which would complete the pattern. Then there's that third piece, which is the follow through, which is additional accumulation.
Absolutely.
But phase one, I think, is now complete. It's a pretty good setup. Break above 150 could set the stage for much further gains here.
I love this. And especially that pattern to me has always been, we're talking about supply and demand, right?
Yeah.
When you think about that pattern in the context of supply and demand, it really starts to make sense. And people love to, tease chartists and say, oh, you draw patterns on charts. Well, if you think about it actually in supply and demand terms, what's happening, you're getting this thing sent down, right? There's more supply than demand. It starts to get sent back up. Demand, the buyers are kind of sending that thing back up. And then there's a retest of this key price, and it gets sent back a little bit, so some supply comes into the market, but it's not enough to drive the thing back to new lows. The supply kind of dries up, and there's still demand, which sends it back up, and then you see the thing start to run. So when you think about a pattern like this in terms of your classic, economics 101 supply and demand charts,
makes sense.
It makes a ton of sense. I always love to remind people of that.
It's a good one. I love it.
That's a great chart.
Your fourth pick. Where are we going?
My fourth pick is not going to be funny footwear. It is going to be Morgan Stanley. We're going back to financials. There's an F in there, I guess, financials.
There we go.
But a classic one for me.
Yeah.
You've got a really beautiful breakout here. You draw that line across, you can just see this thing drifting sideways. You ask your son in elementary school, what is this thing doing? He's going to say, well, it's been going sideways, but now it's kind of starting to go up, right?
Yep.
Think about it, as if you're a kid just drawing lines on those charts. This is a change of character. This is something that has been consolidating, has been moving sideways, but is now getting sent back up to new highs, making a breakout. Once again, we've got relative strength coming into this name, and financials as a space has actually been one of the strongest sectors recently. So, unfortunately, utilities is actually up there as one of the strongest sectors, but financials and technology have been two of the strongest sectors right now, especially if you look at our Stockcharts technical rank, that scooter. Really strong spaces. You're picking a bank earlier. There's a lot of strength coming out of financials right now. And again, if you think about that kind of higher for longer, if we do stay in that kind of elevated rates environment, there's a lot to love here about the financial space overall. But this also just purely technically, it's making a really nice breakout. That's what I like to see. Would love to see it come back and test those levels from above. And if we can bounce there, I think that's a sign of strength here for Morgan Stanley. But once again, if you look out at the longer term view, again, I just love clicking on those little buttons and moving between those time frames. Yeah. You can see actually how strong this setup is here for Morgan Stanley. It's not just making a breakout over the last year, it's making a multi-year breakout out of a long-term base up to new highs. That is a beautiful, beautiful breakout. And you see the way that the moving averages have consolidated here as well. Again, kind of within that broader uptrend, a bit slower than some of those other names that we've looked at, but this is making a really, really great breakout. Names like Morgan Stanley making breakouts to all-time highs is just, that's kind of what you want to see, right?
Yeah.
That's what you want to find. So a little more conservative than some names like EMQQ, a little less risk in this thing.
It's a balanced portfolio.
Yeah. We want to balance it out a little bit.
So Alan Shaw, Louise Yamada famously would talk about the broader the base, the higher in space.
Yeah,
this is a
great
perfect
quote.
I mean, this is a big long-term base.
Yeah.
On the weekly chart, you can see how long it's evolved here, which means the longer you sort of spend in that range, or what the implication, the longer you spend there, that breakout usually is more and more meaningful.
Yeah.
So maybe just the beginnings of this next leg higher here. I don't know if people are prepared for a market where financials are doing as well as they may be doing here. We'll see.
It's been a while, but
but they're good charts, though. We'll take it, right?
There's some names in that space that are really working.
All right, we're to our last two stocks. I'm going to stay back in consumer. I'm going to Tractor Supply Company.
Okay.
Selfishly, we are buying a bunch of raised beds. We've already bought 4. I've been instructed by my wife to buy 2 more. So single-handedly, we appear to be full disclosure. We're buying raised beds for the garden here in the Redmond area. But overall, listen, I think the chart is a really nice breakout story. And again, I think some of the themes we've been talking about here, thinking of some of these charts are breakout levels. You mentioned with Morgan Stanley and other names, right? We'd love a pullback to a breakout level. I feel like TSCO kind of did that, right? You have the April 23 high. We sold off into an October low. We round trip back to that point. We broke above in March, pulled back, and look at how we retest the breakout level, which I love seeing. And the charts that I have these saved on, my working chart list, for lack of a better terms, I just have a bunch of horizontal lines, and I'm looking for when they test it, and I reflect and review. And when I see this sort of setup, and then you see that initial bounce, it really tells you that resistance has become support. This is something you want to probably bet on to go higher.
Yeah.
We then, since then, have now broken above the March high. We pulled back. The March high has now become the new support level, and it's just sort of doing this stepwise move to the upside. So talk about a natural stop. I think, owning a chart like this here with a stop at 265, maybe the 50-day moving average a little lower, around 260, that sort of approach allows you to benefit from upside to minimize the downside.
Yeah.
And it goes back to that classic Peter Lynch story, right? I mean, if you want to grow your portfolio, you think of it as a garden. You don't want to be pulling the flowers. You don't want to be pulling your winning stocks. You want to be layering into those.
Yeah.
So using charts like this that keep making upside momentum and additionally layering into those when you can, pulling the weeds, pulling your underperformers is the way that you grow your portfolio and outperform. Charts like TSCO, better relative strength. I like the price action, and the recent bounce off of a previous resistance level sort of really attracted me to this name this week.
Yeah. I think it's important to remember, sometimes it feels like, okay, it's made the breakout, so I've missed the move. Now I'm too late. But in reality, a lot of these names make that breakout, and that's just the
And there's
start
a lot
of the
more
move,
after that,
right? And so at times, actually, when you're just a little bit above a breakout and you've seen some sort of some tests, you've seen it kind of prove itself above that breakout level. Like you're saying, it's come back to some key moving averages. It's actually finding buyers and continuing to move higher. Sometimes the safest way to play a breakout is to wait for it to actually play out like this. This is almost safer as an entry point than when it actually made the breakout, when it was sort of more unproven,
now you get some
not as tested.
confirmation.
And if this thing really is going to keep running higher, then it might be one of those names that you just kind of need to own. That's a nice chart, though.
We'll see. We'll see how things play out.
Definitely one to watch.
Your final pick. Where are we
My
at?
final pick. I'm going back to an ETF.
Okay.
Now it's kind of similar. I sort of realized this when we walked into the studio. Kind of similar to EMQQ. It's got some similar themes.
Sure.
But this is bringing it sort of back to the States. So this is ONLN. When we talked about EMQQ, right? It was internet and e-commerce. This is basically a pure play on e-commerce, but it's going to be primarily in the States. So this is going to be names like eBay, like Carvana actually is one that's a pretty big thing here. Some of those kind of big names in the States that are all online doing a lot of e-commerce business, online retail and all of that kind of thing. I love the move out of this space though, and similar to what we talked about with EMQQ, where you had that history of big outperformance, you've seen this thing really print a giant move and run higher. It's got the potential to make the big move. It has been absolutely slammed. Let me pull up, before we talk about the daily, I'll pull up that weekly chart. Look how crazy this thing is. I mean, we went on a run from the COVID lows. You can measure with the inspect tool. If you click and drag, we went on a 230% run. Huge in a very short period of time. That was crazy. We then unwound though. So we came down and we unwound that thing and it was down 72%, over 72%. So this is a space that has gone through a huge move to the upside and a huge, equally huge move to the downside. Now we're actually, if we look at the entire history of ONLN, sort of similar to EMQQ, we're starting to make our way back up to new highs. We're taking out that base. And I'm not saying that we're going to go on a 230% run higher, but maybe this has been the giant shakeout that these companies needed to really hit the reset button. I hate to say it, but get valuations back to kind of to earth, and now start to make their way higher. I don't know about you, but I buy a lot of stuff online, and frequently I'm sitting in my living room saying, I don't really want to go to the stores and fight the traffic and all the stuff. I'm just going to order these shoes online, or I'm going to order that sofa online. So I think online retail probably here to stay. I feel pretty safe saying that. And so this space maybe now is just starting to take off. I think when you look at it on the longer term, it's pretty interesting. Coming up on that 3-year moving average, so we'll see how it handles some levels like that. I do want to see the relative strength really start to pick up here. But I think this, again, might be a change of character. That's kind of our theme. And when we get back to the daily, we can see that this thing has really made a nice breakout. It's come back down to test that level too in kind of the mid-30s, and it's moved higher once again. I keep saying it, but we got those moving averages in the right order. And on the daily chart, you are seeing the relative strength come in. So you're seeing this space actually now start to outperform the market. So lot to like, I think, here in that online retail space. This is kind of one way to play it. There are others. There are more direct ways. You can go look at the individual names. And there are a couple of these different online retail. I think eBiz is another one. Kind of mentioning that. So a couple of different ways to play it. But this is a space that definitely caught my eye.
This is a great chart to end with because, again, it's going back to what we talked about earlier, the benefits of looking at multiple time frame analysis. I think a lot of charts feel overextended in that most charts you bring up right now of stocks are kind of up near the upper right corner of the page. And so it feels like, all right, are we too late? But the weekly chart really shows you how this is part of a broader rotation. And some of these things, when you think about the longer term time frame, I mean, plenty of upside above current levels, where others kind of in uncharted territory, pun intended. This one actually has a lot of space after that COVID rally and unwind.
That longer term perspective gives you, more perspective, but it gives you more context, right? Is this a name that's gone absolutely nowhere since it went public? Is this a name that's down, what would that be, 55%? Or is this a name that's up 58%?
Yeah.
You get to kind of choose, but having that longer term perspective and moving between those timeframes, I think, is just absolutely crucial for us. As
and I think
partners.
this is the chart that gives you the confidence to buy something like this, understanding that there's upside potential. The daily chart might scare you a little, but think about those multiple timeframes. Here in ACP, there are really good ways we allow people to do that.
Absolutely.
Hey, this was fun as always, Grayson.
Always.
Thanks for doing this. 10 really interesting charts here.
Yeah, some good picks.
We'll do it again in a month, perhaps.
Looking forward to it.
All right, folks, that's it. That's the top 10 charts to watch for May 2024. Thanks so much for watching these. We have a link in the description to all the charts that we shared in today's show. Don't forget to put those in your own Stockcharts login. And for Stockcharts members, you can save them, set alerts, you can scan on those lists, do all sorts of really powerful things to really make the Stockcharts platform sing. For Grayson Roze, I'm Dave Keller here at Stockcharts.com. Have a great one. We'll see you next month.